What's going on, you guys? Welcome to Risky Ryan Trades. Before I get started, I do want to apologize for the audio. My microphone's not working, so I have to use the laptop. I'll be sure to get that fixed next time, but it's worth sticking through because I do have some interesting analysis, I think. So obviously today, a green day, a nice recovery day, a follow-through day from yesterday. That's a good sign that maybe the bottom is in and that we may be rebounding. But is this a green light? That is what we're going to be getting into today. Before we dive in, here's my disclaimer. This is not financial advice. Trading is risky. This is for entertainment purposes only, in my opinion. But I do hope that you find value in this video. And if you do, I thank you very much for your likes, subscribes, and comments. I do read every comment below, and it is a small YouTube channel. So if you can help me grow, that would be appreciated. We are in the middle of the day right now, so the market hasn't closed yet. But you can see the Dow's up 1.5, the NASDAQ 2.1, S&P 2. And the Russell up 1.83. The big names are getting the love today, other than Apple and Google. So a lot of the stocks that have been beaten up, like Eli Lilly and Costco, they're seeing some relief today. Even Tesla is above $200 at the moment, still below that the very long range downtrend line that sits right around 225. However, holding above 200 that's a good thing. It's a strong indicator. Now, did we experience the bottom? Is there more pain to come? There's one chart in particular that I want you to look at that I think is going to shed some light on this. So what we have in front of us right now is the NASDAQ. And I'm going to bring this back. So you can see right here was October. This is the beginning of this cycle, the very lows. We had our most recent pullback in April, and then today's pullback, or today, the last week's pullback or so. Now, some things to notice. Number one, this trend line got broken. Number two, we are far outside the Ichimoku cloud, much more so than we were during this pullback. So this is a much more severe pullback. Number three, I want you to take a look at the volume. Now, today's not over yet, but this is pretty light volume that we're experiencing here. And we haven't even made it up to the top of the bottom of the cloud or to the Kijun-sen Ichimoku moving average. So all we've done so far is close the gap that we had, the gap down that we had. So I would want to see at least a couple more follow-through days getting us up back over this trend line before I tell myself, okay, maybe I missed the boat, maybe this was the bottom or something. However, I'm still leaning towards this level right here. And what you see in this is called a Gann square. And you can see this Gann angle has held, you know, we've tried to pop over it, we've been below it, we've tried to pop over it. We can't get over this Gann angle since November. We've been trying. And since beginning of the year, we finally made it over this Gann level. Now let me zoom this in a little bit. Now very briefly, right afterward, in December, we got over, and then in January, we retested it, and then off to the races we were. We were coming down, maybe to touch it again here in April, but that didn't happen. And now we are falling down. I also want you to see something here. I'm going to bring this way back. You can see back in 2022, the highs sat right at that Gann level. So that is a crucial level, and it sits at about 400 on the Qs. Now, take a look at this. I'm going to switch this to a weekly chart. Top of the weekly cloud sits right there. And I can't help but feel like this has a magnet attached to it that's pulling price to it to retest it one more time. Can't help but feel like that's what's going on here. Keep in mind as well, like I'm sure, you know, comment below if you feel like you've given up more to this correction than you wish you did. But this was only 3 months ago, 1, 2, 3, like 3-4 months ago. You've only given up 3 months of gains on the year. So this is within the normal range, obviously. Now there's a few other things I want to show you here. I'm going to pull up my Thinkorswim chart. And I'm going to pull up a 1 chart. Okay, so what I have here is the NASDAQ again, and I have it on a daily chart. And you can see here, the top of the cloud is sitting at 450, and that coincides with the 10-day moving average. So despite all of the up action, we have not even yet tapped the 10-day moving average, which sits at the cloud as well. That's going to be a resistance point. So I would be shocked if this just punched through. I would much more expect us to bump our head, come down to retest this level right here, and then maybe then move forward. However, I think what we're going to do is bump our head, and maybe make a lower low down to the 400 level. That's what my gut tells me, and that's why I'm sitting in about a 10% to, you know, roughly cash position, and I have a decent amount in the equal weighted S&P 500, which is a little bit less volatile at the moment. It has been for the last few weeks, just to have some market exposure in case I'm wrong. But this is what I am seeing. Now the S&P 500 is looking a lot stronger today, and that may be a leading indicator to the NASDAQ. The S&P has managed to punch into the cloud, and it is, if it closed right now, it would be closing back over the 200-day moving average, which is great. This means that we're back in the, you know, technically you could say we're in an uptrend still. If we're below this, we're definitely not. Now, a key level that I'm watching is 532, because the Tenkan-Sen and the 10-day moving average are sitting right there. And that is where this candle opened. So I'm expecting this maybe to push us all the way up to 532 before coming back down, perhaps retesting the 200-day, and that'd be something to keep a very close eye on. Now, take a look at the volume. This is very low volume. This is lower volume than, you have to go all the way back to the top. This candle right here is the only one that had lower volume than this. And we do still have another hour or two left in the market. So could get more. But yeah, so that's where the S&P is sitting. It's back inside the cloud, which is great. I want to go to a weekly real quick here. So weekly's not finished, but if we can close the week over that 530 level, we would be closing back above Kijun-sen. And that would be another indicator to me that we probably did find a bottom right here. So 532 on the S&P, that's a key level to keep your eye on. Now, over the last few days, I have been concocting the quote-unquote perfect portfolio. I did a backtest study on the best performing stocks, and the way that I came up with that is what stocks over the last 10 years outperformed the S&P 500 yet suffered smaller drawdowns, so less downside volatility than the S&P 500. Easier to ride, all the gains, perfect portfolio. So I do have a basket of names that I will be putting up on my next video. So do keep your eye out for that. And the best way to do that is to hit the subscribe button down below or the little icon that is appearing right now. Thanks so much for joining me on this video. I'll be making more, so please consider joining me. Your comments and likes are appreciated. Risky Ryan out.